now, right 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 now. Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We got to add a little addendum to the show map today, so we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. They always have been, but it's been increasing over the last 50 years since the government has been bigger. Hey guys, what's going on? Jeb here, and welcome back to Coffee and Crypto Live. This is your weekdaily morning show where we bring you the latest in everything Bitcoin and cryptocurrency. And in today's episode, we are going to be talking about a major indicator on Bitcoin that signals a lot of bearishness. As you guys know, Bitcoin dropped about 15% over the course of the last week. On Thursday and Friday, Bitcoin dropped from about $29,000, where it was ranging sideways, down to where it is now, around 26. Many people are wondering if that drop is going to continue. So we're going to be discussing today whether or not that drop will continue by looking at a technical indicator that is at its most bearish in over 2 years. You heard that right. We just hit a 2-year record on RSI, sitting around 17. We're going to be talking about how that bearish RSI indicates that more bearishness may actually be to come, contrary to what you might think based on a cursory understanding of RSI. Very excited to be here today. Very excited to speak on the topics at hand. As you guys know, one of the things we're looking at this week is quite a lot of low volatility, but we also have an event coming up on Friday called the Jackson Hole Economic Symposium, where Federal Reserve Chairman Jerome Powell will be speaking, and we're going to be paying very close attention to what he says, because it is very likely that we are going to see some kind of major market movement taking place on Friday. So we're going to have to wait and see how that's all going to play out. All right, let's go ahead and read some chat. Really appreciate all of you guys tuning in today and being here. Alex Nybo's in chat said, good morning to you as well. Eric Hardcastle in chat said, hello. Hello, Governor. Rock and Metal News in chat said, hey, Jeb, Sean O'Brien's here. Philly Skills 1428. Conrad Denif is in chat said, hey, Jeb, Rock and Metal News said, big whale buy today. Yep, saw that. GWSP is in chat. Pheno's in chat. Shenanigans is in chat. Brother of C-Nanners. Just kidding. Justin Shaw's in chat. Good morning. Right now. Love to catch the live. You make my morning good ones, Jeb. Well, thank you, Justin Shaw. I appreciate that. Crypto Mini Bikes in chat. Robert Kehoe and also Daniel J. Said, forgot I was waiting with my headphones on, and then, but Jesus, you scared me when the song started. Good morning, all. Apologies for that, Daniel J. Yes, we do like that song, the intro. All right, let's go ahead and talk about the market. As you guys know, Bitcoin's trading at almost exactly $26,000 right now. It is down pretty substantially over the last 7 days, about 11% over the last 7 days. And we've seen quite a lot of growth in the fear on Bitcoin. Even over here on CoinMarketCap, you can see that the fear and greed index is sitting at 34, indicating that overall people are more bearish on Bitcoin right now, even though we've seen a major drop on that market. Now, looking at the market dominance, something I want to point out is that there has been a change here. If we look at the market dominance right here, you can see Bitcoin's market dominance has actually started to trend downwards in a notable way over the last several days. You can see right here around 7, that the market is sitting right here at 49.52% on market dominance not that long ago, even up to 50% just as little as less than 2 months ago. Now the Bitcoin market dominance has dropped all the way down to 48%. It's been gathered, a lot of that market dominance has gone into other altcoins, even some of them going into the stable coins as people have started to cash out and set up dry powder. And that's an interesting scenario because it means that people are starting to prepare for some kind of buy. You see, there's plenty of people right now that are sitting on the sidelines waiting to buy the markets, whether that be the cryptocurrency markets or even the traditional financial markets. The amount of money sitting in money market accounts right now is well into the nearly $10 trillion in the stock market realm. So, of course, if you don't know, you have a money market account. That's where you put your money when you're waiting to put it somewhere. That's essentially the dry powder ratio for the stock market. Same thing here in crypto. There's a huge amount of money sitting on the sidelines, sitting in the stable coin specifically right now, awaiting deployment into the cryptocurrency markets. And the reason that that's so very important is because when those markets do get bought, it's going to lead to more than likely a very fast rally to the upside. We just have to wait for a catalyst. Right now, we've seen a major drop. That major drop has dropped Bitcoin down into historic levels, into historic ranges of support right around $25,236. We'll talk about that in just a moment. And so now we're in this sideways trading where Bitcoin really doesn't have a lot of market structure. It's essentially just trading sideways. It's about as boring as it sounds. Look, guys, Bitcoin just isn't doing much right now. It's that simple. It's just trading sideways in a holding pattern, waiting for something to move it in one direction. And that is what we're going to be talking about with Jackson Hole here in a minute. I think that's where that may be coming. Now, with this market being down here, people are in this kind of holding pattern again in the stock market as we see the drop precipitating on the S&P over on SPDR. Of course, SPDR being the biggest S&P 500 ETF trust. Looking back at Bitcoin, same deal. People are looking to see if now's the time they want to buy Bitcoin. Is the bottom in? Is it not? We shall find out. But those people are ready. Now, the question then becomes, and we'll talk about what kind of catalytic event may happen on Friday, but the question now becomes, is Bitcoin going to have another drop down below its current support level to find new support? And if so, is that where we should buy, or should we consider buying right now? Before we leave this stream, before we exit out of Coffee and Crypto today in the next 40 minutes or so, I want you guys to have a better understanding of where Bitcoin is now, where Bitcoin is likely to go, and how we can be prepared for that. We'll move through the 3 Ps. We go through perception, prediction, and a plan. We're going to apply a lot of the technical and fundamental analysis that we've been doing over the last week and a half to this market and try and come up with some kind of understanding about where we're going to be heading, how we can be prepared for it. Now, I want to talk a little bit about what's going to happen on Friday. Jerome Powell is going to be speaking at Jackson Hole here in 2023 on, I believe, Friday. And everybody's kind of just paying a whole lot of attention to that. Everybody's watching very closely to see what he's going to say. If you don't know what the Jackson Hole Symposium is, it starts on Thursday, August the 24th, which is the day after tomorrow, and it goes through Saturday, the 26th. And this is a symposium that happens every single year. It's put on by the Kansas City Federal Reserve. And at this symposium, policymakers, economists, even some politicians, and especially central bankers from around the world gather together to talk about the global economy and to talk about policy for the next year. It is basically the biggest gathering of people that are in charge of running and managing the economy anywhere in the world. So just a little bit of backstory. It's put on every year at Jackson Hole, Wyoming by the Kansas City Fed. Let me see if I can find a map of the 12 Federal Reserve the 12 Federal Reserve banks and their territories. Essentially, the way the Federal Reserve works, let me just give you a bit of a history lesson here. The way the Federal Reserve works is that you have 12 distinct central banks that are in charge of certain amounts of territory. I'll show you right here. This is an illustration I just found from Wikipedia. You have all 12 of them. One is in New York. One is in Kansas City. Kansas City's territory also includes Wyoming, which is why the Kansas City Bank is putting this on in Wyoming, because Wyoming is part of their territory. You have the Sacramento Bank. You have a bank in Atlanta for the Southeast, one in around the Texas region, one over in, I want to say, Raleigh, North Carolina. I could be wrong there. And so you have those different banks, those 12 banks, and those create sort of this decentralized as far as governance, central bank. These 12 central banks that other banks are able to do business with. They set the baseline interest rate, the effective federal funds rate, and whenever a bank needs to borrow money, they borrow money from one of those 12 banks. Well, come the 30s, that decision-making power was so decentralized that they ended up making a mess of things, and the Federal Reserve System at that time, actually, most people agree, and even the Fed came out and admitted it, made the Great Depression worse. Come the 40s, the actual Federal Reserve was created, and the Federal Reserve's job was to bring together these 12 banks, with the Federal Open Market Committee having a chairman. There's 5 people on the Federal Open Market Committee. Then there's another 5 individuals. One of them is a permanent seat from the chairman of the New York Fed. The other 4 are revolving. I believe it's the other 4 are revolving chairmen of or chairpeople, chairwomen, whatever, of the other 11 banks, and that constitutes the FOMC. Of one of those people, I believe it's one of the 5 original members of the FOMC. One of them becomes the chair right now. That's Jerome Powell. They meet every year at Jackson Hole along with all these other people. It's not a Federal Reserve meeting, but the Federal Reserve puts it on, and the Federal Reserve oftentimes will make policy announcements and discuss policy and the economic outlook for the country at that symposium every year. Happens around this time. Happens out at a ski resort in Wyoming. And these individuals are some of the most powerful people on the planet because they are the central bankers. You have the investment bankers, you have the hedge funds, the fund managers, all of those guys on Wall Street. The Federal Reserve are the central bankers that are essentially kind of that stopgap, that bridge in between the government and in between the actual the stock market and the customer-facing banks that we actually interact with on a day-to-day basis. So you're thinking of, Mellon, you're thinking of PNC, you're thinking of Bank of America, Chase, JP Morgan, Goldman Sachs, all of those. That side of finance, the Wall Street side of finance, the Fed sits somewhere there in the middle, bridges the gap between how the government manipulates the economy and those banks needing to obtain capital. So it's needless to say that this is an extremely important event. Every single year at Jackson Hole. Last year, I made a short about this yesterday. If you haven't seen it, you can watch it. Last year at Jackson Hole, Jerome Powell spoke quite, how should you say, straightly about what the next 12 months are going to look like. He made it very clear that the Fed was willing to take just about any means necessary to get inflation under control, and that meant that there were probably going to be several more rate hikes. This happened after, I think, the third rate hike, somewhere in that range. We had just started hiking rates. Rates were between 1 and 2.5% during the last Jackson Hole meeting. And Jerome Powell pretty much came out and said, look, at the end of the day, we've got to get inflation under control because that's important for the long-term health and stability of the economy. If inflation goes below zero, you go into deflation, you go into a deflationary spiral, and it's very difficult to pull out of because it's almost like an airplane stalling. You just can't get out of it very easily because the forces that put you in that spiral actually make the spiral worse. So it's very difficult without some real surgery on the economy to get out of it, deflation. So you don't want the currency to lose value over time, to deflate over time, but you also don't want 6, 7, 8, 9% inflation, which is what we were seeing last time the Jackson Hole Economic Symposium took place. So the Fed was very serious about getting inflation under control. They've mostly done that. We're sitting at 3.2% right now, headline inflation. We're sitting at 4.7%. That is an area where it's better than nothing, but we want to be down at 2%. The Fed is going to more than likely continue to hike rates until we get that under control. There's a lot of things going on in the economy right now, but essentially you've got a few different components of it. Number one, you've got a geopolitical situation where everything has just gotten more expensive and more difficult globally. We're in the best position of every single country on planet Earth right now economically, bar none. It's not even close. It's not even close. You're seeing a breakup of the peace in Europe. You're seeing a complete collapse of the Chinese market. That puts the United States in a very healthy position, but it also means that there's a lot of job growth. There's a lot of industrial growth going on, especially through the Inflation Reduction Act and the CHIPS Act. You're seeing a lot of build out here in the United States. That build out is leading to a lot of inflation, which is very difficult for the Fed to get under control with their limited tools. We always think about the Fed being super powerful, but they're not super powerful. They're not all powerful. They have control over essentially what they buy in form of mortgage-backed securities, treasuries, bonds, different investment vehicles such as that. And they have control over the interest rate that they charge to the banks that are doing business with them. The Federal Reserve acts as something called the bank of last resort. If you ever hear that phrase, the lender of last resort. If you ever hear that phrase, that's essentially if a bank goes bankrupt and they can't borrow money from anybody else because nobody else will do business with them, the Federal Reserve guarantees that they will loan the money so that they bail them out. Needless to say, the Federal Reserve is very important, and they have a very big role in the economy. If you're trying to understand the economy, you will not and cannot and never will understand the economy without first understanding the Federal Reserve and the Federal Reserve central banking system, and how powerful Chairman Jerome Powell is, and whoever is in charge, Bernanke, whoever it is throughout history you're looking at. The Federal Reserve Chair is one of the most powerful individuals in the country because they have a dual mandate of keeping inflation under control while also maintaining a low unemployment. So, why do I give you all of that historical context and information dump on the Federal Reserve? The reason is because Bitcoin is trading sideways right now, and it's not doing anything. Like, if you look at the price of Bitcoin, it is flat. Bitcoin's doing nothing. It fell off a cliff over here, dropped about 15%. And when Bitcoin did that, we fell below a critical uptrending level of support, this one right here. That uptrending level of support is very significant for Bitcoin because Bitcoin was using that as the baseline of its entire rally, moving here towards the end of crypto winter. Moving here towards the end of this accumulation phase as we move into the halving here in about 10 months. We might talk about the halving here in a moment as well. Bitcoin fell below this for a multitude of reasons. I think the thing that really triggered it, the straw that broke the camel's back, we're probably going to break it anyway, but the news story that came out that day was that SpaceX had, at some point in the last 2 years, offloaded a uncertain amount of Bitcoin. It's hard to tell because of the way that the article read, and there's not much information out there other than what the Wall Street Journal said. But Bitcoin dropped nonetheless. Now we're trading sideways. So let's go ahead and pause. We'll come back to the Federal Reserve. We'll talk about them a little bit more here in a moment. By the way, if you're enjoying today's stream, if you're getting valuable information, if this is interesting to you, hit that like button really quickly because it helps to support the channel. And whenever you hit the like button, it helps to spread this video so more people can see it. It's my dream to be able to educate you guys on the way the financial system works while also helping you to profit in the financial system. And so, and by doing so, gain financial sovereignty in your own life, that you'd be in control of your money rather than your money being in control of you, because I believe that's where you're going to find real, true peace, joy, and fulfillment relating to your finances. It's not going to be from working 90 hours a week. It's not going to be from, buying a flashy car. What's going to come from is being in control of your money, that you're able to do with it what you feel you're called to do. And I want to help you with that. So hit the like button if you're enjoying today's stream. I would be very appreciative. So let's again talk a little bit about the RSI. That's the key indicator that I'm talking about in the title there, that I believe is talking about a Bitcoin crash. It's told of a Bitcoin crash. It told the story of the Bitcoin crash thus far, and it is going to continue telling the story of the Bitcoin crash should another one arise. That indicator is none other than the RSI, the Relative Strength Index. The Relative Strength Index is an oscillator that oscillates around the 50 level. That's the center moving out. That's the center level. Moves up and down. The further it moves up, the more overbought the market is. The further it moves down, the more oversold it is. Oftentimes, people use the RSI as a reversal indicator. It can be used that way, but with great care, it must be used that way, because what it actually represents is an indicator to tell us who's more powerful, the bulls or the bears. The RSI being down here at 18 means that the bears are very strong right now, and we know that they're very strong right now because we know that the market was able to drop as far as it did. We had already moved back to the 50 level. We had already corrected through time. Remember, there's two kinds of corrections that can take place, either a correction in price or a correction in time. We had already corrected through time. Bitcoin had already stabilized, and then we saw this major drop, this crash. And so that led RSI to the lowest level that we have seen since the pandemic. If you look here, I've just drawn this as blunt, as basically as I can. There's a flat level of support right here around 17 on the RSI. This is the single lowest level on RSI that we have seen since the pandemic drop. So you may look at that and you may think, oh my goodness, that's terrible. Like, what is the market all of a sudden in the last week in the worst shape that it's been in since the beginning of the pandemic? Of course, the pandemic was one of the greatest affronts to human civilization that we've had in the last 50 years, especially due to the response of it. We definitely had some interesting responses to the pandemic. So is Bitcoin in as bad of shape as it was back then? Well, I'm pleased to tell you, yes, Bitcoin is in as bad of shape as it is back then, at least according to the RSI. The RSI dropped down to 17, but the good news is the last time that the RSI dropped down to 17 was right here. It was right here. March 15th, 2020, about the Ides of March. Bitcoin is as bearish as it was back then, at least according to the RSI, but if that's the case, that's not a bad thing historically, because last time we were at this level, we rallied 1,500%. Last time we were at this level before then, took a while, but we would eventually rally 300%. Before that, the last time we were at this level, goes back into the early 2010s. So there's not much data going back here, but every time RSI gets this low, Bitcoin ends up going through a major rally. And so that's where we start tying the two pieces of the puzzle together. The Fed meeting on Friday and the effective federal, what am I trying to say? And the RSI being this low together. That's why we start tying these two things together. Now, again, let's remember why the Federal Reserve was created in the first place. Because the Federal Reserve, while they may be the boogeyman in many people's minds, they do actually have some kind of purpose. There actually is a certain reason that the Fed was created. I'm not saying that I'm the biggest fan of the Fed, but what I am saying is that there is a certain mechanism that needs to be in place there. A lot of banks would go bankrupt because people would do bank runs on them. You would essentially have these people get freaked out that, oh my gosh, something's going wrong with the bank, or there's a bad earnings report, or there's they're not making a lot of money, or their stock goes down, or whatever. Back in the 19 zeros, like about 1907, there was a major run, for example. That's when the JP Morgan, the man, not the bank, came in and bailed out some banks to try and save the United States from a gigantic recession and depression. And when one bank went under, it would just collapse and it would just cease to exist. And that's a very difficult way to run a modern economy, because when you run a bank, and this is kind of the difficulty with a banking infrastructure, which is why I like Bitcoin, but if you have a bank and everybody makes a run on the bank and they're using fractional reserve lending, which means that they're lending out maybe 8 to 90 cents on the dollar for every dollar that you deposit, they don't have enough deposits because all their money is illiquid because it's loaned out in the form of mortgages. It's loaned out in the form of mainly in mortgages or in personal lines of credit, for example, like car, auto, personal loans, business loans, credit card loans, whatever it is. The banks are in the business of loaning out money, collecting interest. They don't have enough deposits to cover all the withdrawals before they're able to collect all that debt, then they go bankrupt. And so what ends up happening is that you have a bunch of people that are doing business with one bank go and do a bank run on that bank because everybody's scared about this other bank that actually should be going bankrupt because it didn't do very good business. It goes bankrupt, then you have a bank run that cascades. And that happened a lot in the first 30 to 40 years of the 1900s because the banks were complicated and large enough that could happen, but there wasn't enough understanding about how to stop that from happening. So that's the reason that the original 12 Federal Reserve banking, the original 12 Federal Reserve banks were created to be a lender of last resort. They would lend money to those banks to be paid back with interest. It wasn't free money, but to be paid back with interest, which is where the effective federal funds rate comes back, by the way. So that instead of going bankrupt, they could go and borrow the $50 million that they need from their regional Federal Reserve Bank, pay it back with interest, and then they would be able to hopefully not go bankrupt so that you didn't have everybody lose all their money, because better for there to be some kind of lender of last resort than for somebody to have $50,000 in deposits and them lose all of it, and then you just, the average individual gets screwed over by that. So it is... If you're going to have a banking system, and unless we completely redo our entire financial system, which would unravel human civilization, it'd be a process we have to go through over the course of many years. There's many things that Bitcoin is going to come in and solve in that regard, I believe. Many things Bitcoin is going to come in and resolve. But if you have a banking system, you have to have a central banking system. Let me say that again. If you have a banking system, you have to have a central banking system. And that central banking system has to use interest rates. And those interest rates, because the central banking system is a necessary, you might call it a necessary evil, whatever, it is a necessary of a banking system, then the interest rates are going to be very important because the whole concept of banking is loaning money. They hold deposits, they loan those deposits out, and then keep a fraction of it through fractional reserve lending. That's how they make their money. So those interest rates, therefore, are exceptionally important on the economy. And so that's why everybody watches interest rates. Well, what's going to happen with the interest rate? What's going to happen with the effective federal funds rate? If you're watching the EFFR right now, over on let's go to CME Fed Watch. If you're watching the effective federal funds rate, many people right now are predicting that there's going to be, we know there's going to be a change here in about 30 days or so, but many people are predicting a pause. But that's not for sure. There are many people predicting a pause here at 5.25, 525 basis points, but we don't know that yet. And what we need to see, because there's quite a few hawks on the FOMC. Remember how I talked about earlier? There's that board of I want to say it's 10. Again, don't quote me here. I want to say it's 10. There's 5 permanent members, and then there's 4 rotating, and one's from the Federal Reserve Bank of New York, because that's where Wall Street is. It's the financial capital of the country and the world. Regardless, there's several hawks on the current FOMC as it stands, and they want to see interest rates go up and up and up until inflation gets under control, because they think that if they see a screw, then they can use a hammer, because all they have is a hammer. So if they don't have a screwdriver or a drill, then they must use the hammer being the effective federal funds rate. So we're going to see kind of Jerome Powell is very good at synthesizing everything that his fellow FOMC members are thinking, and synthesizing his thoughts on the economy into something that is concise but is also straight to the point, and it doesn't give too much optimism or too much fear. And that's something I can appreciate about Jerome Powell. We may have our faults with him. There are things that I wish he would do differently, but I can appreciate that he's going to tell us pretty straightly what he thinks, and he's more than likely going to do that at Jackson Hole on Friday. That speech is going to set the tone for the economy for the next year. Not just Bitcoin, but for the economy at large. And so with that Jackson Hole economic symposium, and that announcement, we have to wait and see what he's going to say. Now, I want to speculate a little bit about what is more than likely going to take place. I think that he's going to address some of the key issues that are, some of the key things that are going on in the economy right now that are beneficial. For example, we do see very low unemployment. Underemployment's not looking great, but unemployment's looking relatively well. GDP growth is looking good. Over the last year, ever since the last Jackson Hole Symposium, we've also seen quantitative tightening take place, which means that quite a lot of the treasuries and mortgage-backed securities that the Federal Reserve had bought to stimulate the economy and to put liquidity into the markets, those are being rolled off and allowing to expire. So, for example, if you buy a treasury, T-bill, either one, they have maturity dates. They're typically buying shorter yields, and when the rolling off of treasuries and mortgage-backed securities essentially works that they have a maturity date, and when that maturity date approaches, they just don't reinvest the money. They just keep the money for themselves and they burn it because they're the ones that created it, right? Not created it physically, they're not the treasury, but they're the ones that basically created this money out of thin air. So they just let it roll off, and then that money's no longer there. You shrink the liquidity. So they're going to more than likely talk about how inflation has gotten under control, and the Federal Reserve is going to take credit anyway for being responsible for a lot of that. I don't think the effective federal funds rate's the only thing that has led to a drop in the interest rates. I'm sorry, in inflation, but it has definitely played a factor. And so there's probably going to be a doubling down of saying, hey, look, we're trying to get inflation under control. We can see that by raising the effective federal funds rate, we have been able to drop inflation quite substantially, slow down the economic growth, and kind of make it last a lot longer. If you've ever had a protein shake and it says on the back, you've got one of our employees, Malachi, he's a personal trainer, and he's very big in fitness, so he's probably going to correct me. He's like, how you have on the back of a bottle, it says the whey protein takes a lot longer and the soy protein is very quick. You want to kind of stretch out that energy. You want to have a low glycemic index on your economy, if you will. If you know anything about health, you'll know about the glycemic index of GI. If something's low GI, it's going to give you energy over the course of 5 hours rather than just giving you a spike of energy right now and a crash in 30 minutes. The effective federal funds rate is essentially trying to do the exact same thing in the United States market. They're trying to slow down all of the growth that's going on because the inflation is actually a good type of inflation. There's a huge amount of industrial build out going on right now in the United States, from the CHIPS Act, from the Inflation Reduction Act, from the infrastructure bill, from petrochemical sector rebasing from Germany and coming from Europe and coming from Russia, from the amount of build-out going on in the petrochem sector having to do with fracking and natural gas. There's a huge amount of build-out going in the United States, massive amount of jobs, massive amount of open jobs. The economy is actually in really great shape according to the numbers. The Fed's going to gloat about that a little bit, say, hey, look, we helped with that. But the Fed is trying to raise interest rates to spread out some of that growth so we don't have a ton of growth for 2023 and 2024 and then a giant recession here in 2025. And so by doing that, then the Fed is going to say we need to continue keeping rates high and maybe even raise them higher because clearly inflation has not come back under control. The Federal Reserve wants to slow inflation down to target 2%, so we're continuing to see about 2% inflation every single year rather than 9% inflation 1 year, 0.015% inflation in 3 years because we're going through a recession. So you're probably going to see a signal that at least a pause and a plateau for a while is going to happen. And I would not be at all surprised to see an announcement that there's going to be another rate hike as a result of the Fed continuing this policy of quantitative tightening to slow down the growth of the economy because we kicked the economic growth into overdrive following the pandemic. And also that there's going to more than likely be that extra those hiking effective federal funds rates for the sake of trying to slow down that growth into a more sustainable way. So it's a lot of rambling. Let me go ahead and read chat. Really appreciate all of you guys tuning in. I'll talk about in a second how all of this relates. Again, we've got these two trains of thought. We've got the oversold Bitcoin, and we've got the Jackson Hole Symposium coming up on Friday. We're going to marry those two together and see what they're going to do to each other, and I think that we're going to have an idea by the end of the stream how that's going to impact Bitcoin, where Bitcoin will go, and how we can be prepared for that. All right. So, Stymie Snurdly said, how much was spent on defense sending billions to Ukraine while creating a false sense of economic stability on our books? So, Stymie, a point to keep in mind about that is that the majority of the defense that was sent to Ukraine was either one sent by other countries, so it came out of their defense budget, so not our problem as far as in the United States. Good job, NATO, chipping in. Or it was stuff that was slated to be decommissioned. You don't see the United States using Javelin missiles. They just don't do that. If they want to launch a missile, then they send a F-35 to do it, or they send an Apache attack helicopter to do it, or they use a Tomahawk missile from a destroyer station in the Persian Gulf. The United States does not use that hardware. That's hardware that is 30 years old, and it was very marginally used, and frankly was built also for the sake of being sold. Much of the equipment, and even a lot of the ammunition that has been given to Ukraine has been given out of surplus that was slated to be decommissioned. And the decommissioning process for military hardware is not as simple as just throwing it in the trash can. You have to destroy the stuff so it doesn't get in the hand of terrorists. You have to destroy it so it doesn't get in the hand of gangs or cartels, because the last thing you want is some thug running around with a javelin missile and blowing things up. You don't want that. You don't want 500 javelin missiles getting in the hands of the Bloods or something, because you just don't want that released on the streets. Anyway, when the United States is decommissioning things, or it's giving equipment that it was already in its stockpiles to Ukraine, it doesn't actually necessarily cost the taxpayer any money. Now, that being said, there has been a huge build out on the ammunition side of things, but the ammunition supply chain, because Ukraine runs through about as much ammunition as all of NATO has, like, very regularly. They use a lot of ammo. There's a lot of fighting going on over there. It's terrible. The United States does fund the creation of ammunition. That being said, that's also led to the creation of a ton of jobs in the United States. So it's been a government expenditure, but it's led to job growth and job creation in a lot of sectors, because somebody's got to create the ammunition. The United States doesn't actually need that much ammunition creation. I'm talking about everything from 9mm to Javelin missiles and Patriot missiles and Tomahawk cruise missiles, everything from the smallest to the largest ammunition. That does cost money, but like I said, it also creates jobs. Now, the one thing that has cost the United States money have been the M1A2 Abrams main battle tanks that have been sent over there, because of course those will have to be replaced if we want to keep our current tank force, and I think there's 2 Patriot missile batteries that we've sent over there. In the grand scheme of things, that is money, and it is billions of dollars, but the defense budget sitting at somewhere around $800 billion has not been that much. And so the other reason that I think that has been a good use of our money is because Russia is the largest geopolitical adversary that the United States has ever faced off against in the history of the world. There have been about 4 major nations that have ever been a direct threat to core territory of the United States. That has been Britain. Of course, we rebelled against the British and created our own sovereign nation in the 1700s. And then during the War of 1812, they invaded and burned down the White House, and you have all the stories about that. A tornado came through and swept them away. A lot of very interesting history there in the War of 1812. It's where the Star-Spangled Banner was written. Fort McHenry. And then the next time that you saw an invasion on actual American territory was the Mexicans. The Mexicans invaded at the Alamo. If you'll remember the Alamo, that's the second other nation that has ever posed an existential threat to the survival of the United States of America. The third were the Japanese. The Japanese obviously bombed Pearl Harbor, and if we had lost the war in the Pacific, the Japanese were working on submarines that could launch airplanes that could bomb San Francisco and could bomb Los Angeles. And the fourth, and perhaps the most significant because of the advent of atomic weapons and nuclear bombs, was Russia. Russia has been, for the last 70 years, the only credible threat to the United States' sovereignty and continual existence because of atomic bombs, because of atomic weapons. And so with this remnants of the Cold War, people are still feeling the effects of the Cold War. It's been over for 30 years, but Russia still exists. They're a lot weaker, but they've still got bombs. Way more than enough to destroy all of humankind. Plenty to evaporate the United States. And we have plenty to evaporate them. I'm not saying they're necessarily stronger than us. But those are the only 4 countries that have ever posed any kind of existential threat to the United States. Britain's an ally of ours, Mexico's an ally of ours, and Japan is an ally of ours. We came out on top on all 3 of those wars. And we are now the leader of all 3 of those countries in the family of nations. Russia remains the mortal enemy of the West. You can play it however you want. Things got warm there during the 90s for a little bit under Putin's first term, and people thought, oh man, Russia's going to join NATO. Russia's going to join the EU. It's going to be great. That's not what ended up happening. Because for many reasons, Russia pretty much always slides into authoritarianism, and as much as the United States has its flaws with its current democratic system, that doesn't sit well with people that are capitalists and with people that are pro-democracy. So Russia's always been an ideological enemy of the United States. With a few $1 billion of spending, arming the Ukrainians, not only have we prevented a direct assault on Poland, because the Russians have made it very clear that they would love to march straight through Ukraine and straight through Poland to invade, straight through Ukraine, straight through Belarus, with Lukashenko. He's basically the last dictator in Europe besides Putin, and they're both, best friends. Russia wants to move troops straight into Poland, straight into Romania, straight into Latvia, Lithuania, and Estonia. Those are the 5 major nations, and also, what's the little nation I'm trying to think of? It's the little one. It's funny. I can think of Transnistria. What am I trying to think of? What's the name of that little country? Right next is in between Romania and Ukraine. Moldova. Moldova wants to. For many reasons, Russia wants to conquer all that territory. For the expense of a few $1 billion. Remember, we spend $800 billion every single year on military that does nothing. It sits there as a power projection tool that says, hey, world, don't screw with us because we'll beat you up. And it's there. It's ready. I'm not knocking our military. I'm thankful for our service folks. But it's deterrence. For a few $1 billion and 0 American lives lost through the Ukrainians as a proxy war, it's nothing we're doing wrong. They're defending their territory. We're just supporting an innocent country. Not totally innocent, but innocent in the fact that they didn't start the war. For a few $1 billion, we have the ability to completely cripple the Russians. I hope you realize Russia is not coming back online as a modern economic power for centuries, if ever. They are broken to their core, and I would not be surprised at all if Russia fragments into feuding city-states within the next 30 years. All for the cost of a couple of $1 billion. We've been able to completely cripple the Russians and destroy once and for all, and destroy the economy once and for all, of the last major geopolitical adversary that the United States has ever known. So has it cost a few $1 billion? Sure. Was it worth it in my book? Probably. All right. Expantera Capital donated 10R. Not sure what currency that is. It looks like it translates to about $2. Thank you so much. I appreciate your work. If you can check in on TradingView Merit Circle ticker, MC thank you. McThank you. Wish you all the best. Merit Circle ticker. I will take a note of that and look at that after the stream. Give me 1 second. Just pull that up. Merits. Yep. All right. I will look at that after the stream. Appreciate that. All right. Lol, Mexico invading. That was a joke. It happened, though. There's not many nations that can say they have boots on the ground in the United States. We're, off on our own little island in North America. There's not been very many major threats to the United States. So, as little of a threat as it may have been, however you want to look at it, it was a threat. Shadrach Frost said, folks, can you please take a moment and smash the like button and give back some love and support for Jeb? He comes to us daily. Show him that love. Thank you so much, Shadrach Frost. All right. Now, let's tie the pieces together. How is the Federal Reserve... And hopefully that little sidetrack was interesting. The Federal Reserve and Bitcoin's drop. How do those two things tie together? Well, I think that you're going to see a somewhat similar but more optimistic message than what you saw last year. Last year, Jerome Powell was very careful not to use the word optimism, was careful not to paint everything with rose-colored glasses, not to paint everything too rosy at Jackson Hole. I think we might see a little bit more optimism from him this year because the economic indicators are looking a lot better. We're seeing inflation come under control, but I think there's going to be a continuation of the idea that interest rates are going to have to stay high for the purposes of combating inflation. When that occurs, that could have a bullish or a bearish impact on Bitcoin. I'm pretty sure that's essentially what he's going to say. It's relatively predictable. But when that occurs, we don't really know what that's going to do to Bitcoin because there's not a great deal of historical precedence for what the effective federal funds rate change does to Bitcoin. Sometimes it leads to bullishness, sometimes it leads to bearishness. Essentially, whenever you see a promise of a rate hike, a lot of times that can be bearish for Bitcoin, but ultimately it's a little bit difficult to tell. I'm inclined to believe that if Jerome Powell comes out and says that there's going to be tighter rates, that you're going to see a drop on Bitcoin. But it's not that obvious. What is obvious is that whatever he says is going to, one, give us information about how Bitcoin will react to those rate changes when they occur. This rate will not stay here forever. We're not always going to be at 5.25. Eventually, we're going to go up, or eventually, we're going to go down. If Jerome Powell comes out and says that, kind of a decision tree kind of deal, if Jerome Powell comes out and says that we're going to more than likely see more hikes on the interest rates, and the market drops, then that means that we can expect that when a hike does happen, then the market's going to drop, right? If Jerome Powell comes out and says that the interest rates are going to drop and the market goes up, then we can expect if the interest rates drop, that the market's going to go up. And you can run through all four scenarios there: drop, high, drop, etc. And drop, high, etc. Whatever he decides here is going to give, whatever he says here and how the market responds is going to give us context about how the market will respond next time. So it'll make it easier for us to predict these things moving into the future. But whether he says up, down, or he says we're going to sit here sideways for a year, here's how I want you to be prepared. Keep in mind the principles of trading. There's certain trading strategies that you can adopt. One of the ones that I like to do is very simple. You just look at the levels that are significant, and you set an open right above the level of resistance, and you target somewhere above that. We'll come back to the target. And same thing for the shorts. And I think the short position is the one to be betting on right now, to be honest with you. I'm more on the short camp. We've talked a lot about the perception, by the way. I'll just give you my prediction. I'm at like 55 to 60% short prediction, drop prediction. I think we're going to drop with about that likelihood. If Bitcoin does drop to that degree, then you just set up a sell signal right below this uptrending level of support. You would put your exit right here above 25,236. Use a very tight stop loss risk reward ratio. These are just example numbers, nothing for you to really go off of exactly, but I hope you see what I'm kind of doing here. For the short trade, probably put an exit above 25,236. That's the drop that we dropped to recently. Remember, we've talked about 25,236 for a year on this channel. The market dropped to exactly 25,234 and a half. Talk about how significant those levels that you hear about on Crypto Jeb are. They're true. They're serious. They're important levels. All right. That being said, oops, sorry about that. Give me 1 second. I just grabbed my chart and put it somewhere else. Let's try that again. All right. So I would set up a short trade, something like this. And then, of course, if we drop below 25,236, you just repeat that with a short trade, something like this, any target down here. The target could be all the way down to 22,808. Remember, we use trailing stop losses, so make sure that you have those in play. As far as the resistance here, the bullish resistance, the resistance on the upside, to the upside, I'd probably put it somewhere around 27,000, 27.5. That's 3/4 of the way to 30K, and I believe it's also going to represent a level that has been tested as support and as resistance multiple times in recent memory. If you look at the VRVP, there's also going to be in looking at the last 6 months or so of data, there's also going to be a resistance right here on 26.8, so you could put your stop either one of those places. But again, oftentimes your trailing stop loss is what's going to exit you out of the trade, so the target is not actually as important as you think because you're going to use the trailing stop loss to get you out of that trade. So that's how you can be prepared for both scenarios. Ultimately, if it goes up or it goes down, have your trading strategy set up with your actual trade that you believe is going to happen and your hedge bet. And if the market moves into either one of them, then be prepared to profit off of either of them. All right. Let's go ahead and read a couple of comments here, and really appreciate you guys for tuning in. Make sure to hit that like button if you're enjoying today's stream. McDonald's is advertising in our chat. That is so funny to me. That is so funny to me that I'm not gonna remove it for spam because I'm pretty sure it's a joke about people losing their butts in crypto and needing to work at McDonald's. All right. Absolutely. Yeah, so Eric Hardcastle, welcome to the chat, said, I love history. I do as well. Donald Trump, I hear you're having some trouble in Atlanta right now, my friend. Who saw that story? A fourth indictment. Nukes, always a power play, like a boxer with punching power. It's the last thing to go. That's right. That's right. All right. Let's see. Yeah. Good deal. Let's read some chat here for just a second. Good deal. Everybody's talking about BRICS. Yes, I believe BRICS is working on, talking about, I can look into that more and bring that for you guys tomorrow. I will look into more of what's going on over there. I think what we're seeing is they're talking about potentially adding more members. Guys, people are so worried about BRICS. Let me just tell you something about BRICS. BRICS is Brazil, Russia, India, China, and South America. Brazil is up a creek right now because there's a global fertilizer shortage. Why? Because their buddy Russia invaded Ukraine, and now they can't get fertilizer or exports out of either one of those nations. Most of the Brazilian soil is very difficult to farm in, so they need a massive amount of fertilizer imports. Russia, need I say anything? Like, do I really need to explain why Russia is up a creek economically? They are an economic pariah. They don't exist on. If you look at the map of the globe from an economic lens, there's a giant gaping hole with the landmass of Pluto sitting right there, east of Europe. Russia may as well be offline for the global economy unless you're trying to buy cheap oil or you're Iran. That's about the only... So that Russia is not a power player on the global stage right now when it comes to economy. Of course, they've got nukes. Of course, they got some kind of military, but they're not a giant player. China is undergoing deflation. They're one of the probably biggest countries to collapse in the next 20 years. South Africa, not a great power on the global stage. India is probably the strongest of all the countries there, but India is never going to replace what China did. BRICS is a powerful nation bloc, but nothing as powerful as the allies, if you will, the family of nations of NATO and then also Oceania. Russia, China, India together is a good percentage of global economy. Yeah, and Russia is collapsing. China is collapsing, and India has a lot of internal problems with politics, corruption, and infrastructure. Not saying that they're not powerful. They are. But what people are talking about BRICS putting out their own currency that's going to take over the dollar or different things like that, they're going to compete with the United States. No, it's not going to happen. It's not going to happen. Good deal. Well, I appreciate all of you guys tuning in. Hopefully this was an exciting show for you. Really appreciate being able to share it with you. Looks like we have over 130 likes. Let's see if we can get to 150 likes before we wrap it out. If you could help to support the channel that way, I'd be very appreciative. And also make sure to stay tuned because we have more content coming out. Love sharing my insights on the global markets and on cryptocurrency with you. I believe that there's going to be a movement on Bitcoin. And I think that you guys can make some money trading that movement. So stay tuned. Come Friday, I think we're going to see some volatility and things are going to get interesting. Until then, though, if you enjoyed today's video, hit the like button, subscribe to the channel, and also make sure to sign up for Club DeFi. Look, guys, Club DeFi is the place where I teach about cryptocurrency technical analysis. If you want to learn about technical analysis, it's going to help you. It's very simple. I mean, technical analysis is where all the news and all the understanding of the markets is synthesized together into one price. The price itself synthesizes all of the news, all the data, and averages out the markets into one number. If you want to find one number to tell you how the markets are doing, you look at the price. To analyze that one number, you do technical analysis. Technical analysis is the core, therefore, of all analysis. All analysis goes right back to technical analysis. So quite simply, if you want to be a profitable trader or investor, you've got to do TA. And so I teach TA because I've been doing TA every day for 6 years. So if you're interested in learning TA, you can sign up for Club DeFi's Principles of Technical Analysis. A lot of people have benefited from our teaching over the last 5 years. We've had thousands of students go through our programs, and I think that you could be blessed by and it would help you. So if you're interested, Club DeFi's down below. If not, another thing I recommend is LuxAlgo. LuxAlgo is also going to help you substantially in your trading. It's almost like a shortcut. It's not going to give you every single thing that you need. You're not going to just use LuxAlgo in your trading, but you can do a lot with just LuxAlgo. You're going to be very thankful that you have it because it's going to do a great job at telling you where the market's going, where the market... which direction the market's going to go, how far the market's going to go in that direction. And I'm just very excited to be affiliated with them because I use LuxAlgo daily. By the way, an update on LuxAlgo, I meant to tell you this earlier. LuxAlgo did actually drop the trend catcher, which makes it a little bit more easy to get a buy signal in the future. So just a quick piece there. It's interesting. It did call this movement, gave you about 24 hours notice that Bitcoin was going to crash. So if you're interested in getting LuxAlgo, use coupon code JEB30, JEBB30 for 30% off at checkout. You're going to be so glad you did that also. Guys, before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.